Welcome, Forex traders, to this video analysis brought to you by Admiral Markets, where I'll be focusing on the US dollar trade setups that I have in mind for this week of January the 12th, Monday here, where we take a look at the Euro-Dollar weekly overview, Pound Dollar, Dollar Yen, and AUDUSD. First of all, though, please be aware that this video is intended for a global audience and may not be suitable for you. To find out if it is and other details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange is considered high risk and it may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is not advice and is for educational and informational purposes only. And by continuing watching this webinar, you agree with that disclaimer. And I thank you for your attention. Starting with the euro versus the US dollar here, we can see that the pair is actually breaking through the wedge, this wedge that I will draw on the chart, this green line here and here, and price is breaking through that wedge. There's actually two reasons why I think this is a good break. First of all is that the E part of the wedge is most likely finished. This is a A, B, C, D, E wedge that has been completed. So that, of course, indicates a potential for a strong fall. And the second clue, of course, is that the price is indeed falling strong. So that is kind of confirming the analysis. So with that impulsive fall that we've seen throughout 2014 and this year already as well, I'm expecting your dollar actually to continue push through this trend line here that we have here, the bottom of the wedge, and continue to lower ground. Now we have 116.60, which is still basically a historical support level. That could give a reason for price to bounce a few hundred pips, perhaps, maybe not even that. We could see a bit of a recovery rally, but I wouldn't expect much of a upside retracement. Maybe 119, 120, max 122, the very max 125. I know that's a quite wide range, but for a monthly chart, that's relatively narrow still. Before the downside would continue. The 113 is the primary target, the minus 272 target, and the minus 618 perhaps even this year. It seems a bit far for the moment, but that is something in the back of my mind that price could get there eventually, is parity. So looking for downside at the moment, in my opinion. Question is where? Well, if we take a look at the daily chart here, we can see a very strong fall since mid-December, almost 1,000 pips. So if we put a fib from that swing high to this swing low, I would be interested in fibbing and in trading it from the 23.6 fib, the 38.2 fib, the 40, the 50 also, or the 61 point, any of these fibs basically. I will take swings and try to take setups. If I see confirmation candlestick patterns at these fibs, I would take attempts at shorts on the euro dollar here. So we're looking at a pretty interesting potential to the downside here when looking at the euro dollar. Now, what if price doesn't get that high? Of course, that is always something. What if scenarios we always have to think about in trading. It's a lot about scenarios, and there are always kind of a couple of scenarios usually that seem likely or are likely. So one of the scenarios is that we just break through this bottom, 117.50, and price just breaks through it. Doesn't even retrace up to the 50 fib right now. Could happen still later on. Right. So in that case, I would look for the zone here between 117.50 and 116.60 is pretty tight. It's only 90 pips. So in that case, I would try to find a smaller intraday trade, but I wouldn't look for swing trades. Swing trades are interesting when we get the pullback. Of course, if we break 116.60, then we have more space down to the 113, as I said, which is the bigger target. Now the pound dollar, let's take a look at this from an hourly perspective. We got a good candle break here, so this looks like a good bear flag that has been broken, and a potential short, in fact, for a downside. Now, of course, looking at the 4-hour candle, it's pretty impressive. What I might do is, instead of taking it here, which is already halfway from the top here to the bottom, wait for the 4-hour candle to close, wait for a retracement about halfway of that candle. That reduces the risk significantly, because of course the short here is at 151. If we wait for a retracement halfway the candle, it's 151.40, and the risk is goes down from a 60 pip, from a 100 pip down to a 60 pip or so. That adds up. Obviously, it's easier to gain a 60 pip after that and get a one-to-one trade, or maybe even a bit more than that. A 100 pip risk, of course, is easy. It's more difficult to compensate. Price from a 4-hour perspective fell a lot too. So, in that regard, the pound dollar, very similar to the euro dollar, made a very faint correction here up to the 23.6 fib. So it looks very much bearish as well. Ultimately, though, if we look at the bigger time frame, and this is something that is a tad different with the pound dollar, we see that we have a bigger support trend line. So that is something that doesn't seem to cause price to stop at the moment. Perhaps if we change the line a bit higher, you can see we actually broke through it. Of course, these monthly trend lines are more of a wider range of zones at a precise level. One precise level, though, that is valid on the monthly chart here and weekly chart is the bottom at 148.25, I think. So 148.25 is obviously a strong bounce potential, and that's, of course, a level where price could bounce at and could have troubles with breaking through that level. The dollar yen is pretty interesting too because of the massive uptrend that we do have here at the moment, but price is struggling right here the last month or so. So what's going to happen? Well, I still expect price to continue to the upside because of the massive trend that we've had here, but from which spot? Well, I'm looking at two levels. I'm looking at the 38.2 fib, which is 113.94 as a bouncing spot, and I'm looking at any of these fibs like the 88.6, 78.6, perhaps even a 61.8 fib for earlier bounce. Okay, what could happen with the earlier bounce is that we get a triangle like this, basically, and price then breaks higher, and we don't, or the price doesn't get down all the way to the 38.2 fib. So I'm going to keep an eye on both levels, see which one plays out, and we'll keep an eye, of course, for the moment, first on these higher levels here at 116.20, 116.70, and see if that is the bounce. Probably price will bounce a bit, but there is a chance that we can retrace lower or we indeed move higher. So that's the thing that remains to be seen. All right, this is kind of the decision point here when it makes the hook back. Will it go lower or continue higher, or will it retrace deeper? Now, of course, if it does retrace deeper, then I'll be looking for the same trade, but then lower from the 38.2 fib. So basically, if I use a 78.6 entry, I will keep an eye on this turning spot and move the stop loss right below it, just in case it does crash through it. I'll be out for break even or perhaps even a small profit. Last but not least, the Australian dollar versus the US dollar. I'm not too interested in this pair because we're in a very strong downtrend, but the price has broken out of that and had a very strong impulse to the upside. So it's kind of in a no man's land in a way. It's a downtrend, but price is showing speed to the upside here and now actually showing speed to the downside again. So it's a bit of a mixture. I'm going to wait and see how this plays out, wait for more information myself before trading it. So I'm going to wait and hold mode with the Australian dollar. All right, this week's webinar, we have a great lineup, I think. We have trading versus gambling versus investing on the 15th of January, Thursday evening. Definitely worth your time. Then we have some great trading labs, in fact, lined up on Tuesday, Wednesday morning, moving averages and intraday trading. Definitely recommend that. And of course, Nenet Tarantala's nickname is his nickname. Weekly FX recap on Monday evening, and Wednesday evening, the Guppy moving averages. So I'm looking forward to see you in one or all of these webinars and wish you all very happy hunting and good trading.